All right. Today I want to go over why I'm bullish on Reddit stock. Now, there's a lot of volatility here, so it could go down or up, hopefully up. If it goes down, I'll buy more, but um, it could go up any time, and then you can never get it for that price again. So that's why I want to mention it now. Just I don't want it to like skyrocket and then everyone be like, "Why didn't you tell me?" So I'll probably end up making a separate video for every company that's in my portfolio, but I wanted to talk about Reddit first. Um, Reddit has a few unique things going for it that not many other companies do. Now, I want to, in case you didn't know, Reddit is a uh, social media site where it's unique in the sense that it's the only social media site where you follow ideas and topics rather than an individual. Um, and it causes, as a result, it's a social media where most people don't even use their real names. They remain anonymous. Um, and that's appealing to a lot of users come from Instagram, and everything gets kind of like narcissistic because everything is about the user, the individual, and their social status or how attractive they are, whatever. Reddit's the ability for you to remain anonymous uh, is quite valuable in that regard, and I think it's worth mentioning. So, when I am evaluating investment, so this is a website called stockanalysis.com, and I owe them a lot. They give me visual representations that otherwise, like if I were an analyst from like the 80s or 70s, some of the stuff this site gives me access to would take a lot longer. Now, you have these different tabs here. Usually, I always change things from annual to quarter. I'm almost always analyzing things quarterly instead of annually. So you go to financials here and you go to quarterly, and you have the big financial statements here. And here you see each column here is a quarter, and you're able to see here the revenue growth. Now when you mouse over this icon here, stockanalysis.com does this beautiful job of showing you like the trend over time, just like through the visual. And so here's even the percent growth. You can see um, it's ramping up like crazy, and the cost of revenue is very low, and we'll get to that in a bit. Uh, Operating income breached positive this year, and is going to be positive for every quarter in the future, probably. And you can see how they just became profitable, like in the last year or two. And I think it's the beginning of a lot of money. Now, one of the weaknesses, and I'll get to this later, of the only real weakness of the stock was the shares were being diluted. Now that is now come to a halt, which I'll get into in a little bit. Um, Earnings per share. Now, I want to talk about the 90% gross margins. So, when you analyze a lot of companies, after a while you realize that this 90% gross margin is kind of rare. Royalty companies have it just out of their business model, and you'll find Adobe has it actually. Um, Basically, it's a measurement of how much of your costs are variable versus fixed. So if you have a really high gross margin like here, it means that most of your expenses are fixed costs rather than variable. So that means as their sales increase, 90% of the money, well, not 90%, a lot of the money is going to fall to the bottom line more than most other companies. You know, if you were to take a random company, we'll just go to a trending company, like even Amazon. You go to Amazon here and you'll see it's a typical, you know, even Amazon, 50% gross margins. Huge difference. And of course, it depends on the business model, but you have to understand that the real world, in English terms, cause of this 91% gross margin is the fact that we're selling, the fundamental business model is selling ads. We're selling advertisements. But the content in which the advertisements are displayed is on content that is being generated with free labor. Now, there's some costs, and that's why it's 91% instead of 100. But the amount of revenue this company is going to be able to generate for the amount of money it has to spend to generate it is going to be, it's potentially unprecedented. Sure, there could be bigger companies making more money, but they're having to spend a lot more money than Reddit is in order to make those sales. So basically, Reddit is extremely efficient because the source, like the content you're selling ads on, is being created by people who are doing it for their pleasure or distraction, whatever, entertainment. They're being paid in dopamine or pleasure, whatever, enjoyment, instead of being paid in money. Which, from the investor, business owner standpoint, is nice because we don't have to, like, think about, like, what, like, Fox has to pay their news anchors and all the behind the scenes people to generate the content just for them to sell ads. And, Reddit just bypasses all that. So another thing is a popular thing that people talk about because of Warren Buffett is the moat. So durable competitive advantage. When you're looking at an investment, you want to think about, could you lose sales to a competitor? Are people going to no longer use your service or the good or service for some reason? That, like, whatever that reason is, and a big one is a better competitor comes along. Reddit has no real competitors. I mean, you could say other social media sites, but they all have their own niche. And so you can't, like, leave Reddit to go somewhere else, is the idea, or it's very difficult to. Advertising fundamentally is a very safe, consistent business model. It's not like you're selling a cyclical commodity. It's not like you're in anything cyclical or volatile. Like, you could use your metrics. Like, this is basically how much money, how efficient your ads are at generating revenue. And you could see that because of the lack of alternatives, they're going to have pricing power. They're going to have leverage to charge more and more. If you basically, because so much attention, because of so much humanity's attention is on Reddit, I think it's the 6th most visited website now. They have leverage where, like, if you are trying to sell your merchandise to the masses, you got to pay Reddit. Like, if you don't pay Reddit, you're limiting your sales. So that's kind of like where the power comes in. That's where ultimately that's where the money is going to come from that leverage. So then you also have share repurchase programs. So this is new, that came out this last earnings report. And the main concern, like I said before, the only concern really with Reddit was the share dilution. But now that has come to a halt. I have a feeling that we'll never go beyond 191 million shares outstanding ever. I expect that number to slowly decrease forever. until they finally think that until if I were the CFO, the buybacks are going to start and then continue until the market has overappreciated the company. Like if there's ever the day that the company's vastly overpriced and it's just overhyped and too popular, in that case you'll reallocate the return of capital to shareholders to dividends rather than the buybacks. So, and you can see how the company is going to afford to be able to pay out dividends in the future if they keep this up. They could be making, they'll be making $1 billion or $2 billion a year by the end of the decade. Maybe sooner, we'll see. And there's another thing is AI, like when you're using Gemini or Grok or Chat GPT, a lot of the data they're getting is from Reddit. That's like where a lot of the human conversation is happening about any subject you can think of. There's a subreddit for anything. I mean, and AI is getting a lot of the data from that, and someday that could mean more revenue for Reddit. We'll see how they monetize that. So you can see this is what the analysts forecast for the stock, which is kind of interesting to look at, but you don't want to give too much credence to what the analysts think, because they're not gods. They're not all-knowing. But you can check the metrics here, and here's the actual investor, their last earnings report. Yeah. I think they're done diluting shares. Adjusted EBITDA is double the prior year. Net income's just shooting up. And I like the simplicity of the business model. It's not like some high-tech hardware industry where you got to keep innovating and making your past products obsolete in order to remain relevant and profitable and to keep growing. They're just selling ads, and once the ball's rolling, once the platform's going, like the masses and the algorithms are just gonna keep it going, and the owners aren't even gonna need to manage anything. A beautiful thing. You can see the growth in the advertisements in the US are more lucrative than international, but they're both growing. Very little debt. I mean, they basically have no debt. Chance of bankruptcy is 0. I mean, they have more cash than debt. They could take that and just pay it all off. But they choose not to. There's financial strategies behind that. Tax deductions and capital's better used elsewhere. Like, I even think, like, unless the stock is really overvalued, buybacks are better than paying off debt, because inflation will help you pay off your debt. That's a lot of reasons why real estate investors got rich in the last 4 decades. Which is kind of why, in a way, I wish they used a little bit more debt instead of the share dilution in the last year or two. That's probably the only thing I would have changed if I had absolute power over the company. But maybe maybe they know better than me, and it'll just turn out for the best, and I'll end up richer because of it. But yeah. So I would consider, I would love to hear any counterpoints you might have as to why not to buy the stock. Um, you can see this forward PE is based on their projected earnings, which I think are like could be half of what they really were. If they earn double what the analysts expect, their forward PE is actually 17. Because you could see earning double the money is doubling the EPS. Doubling the EPS, I mean, you could see how they would double this. They could double this. They could double this. What is forecasted? So you can look at forecast. You can go to what the analysts have. So annual, quarterly. Make sure you go to quarterly. And you could see they're forecasting. That forward PE is based on these earnings per second forecasts. And why would it drop from 124 to 0.59? I mean, the lack of Christmas isn't going to be that bad. Like worst case, it'll probably be 0.80. What is this? 0.59. I hope to God we don't only make 0.59. I wonder what they're basing that on. But anyway, see if there's anything else. So anyway, market cap 26 billion. The day comes where this is 260 billion, 10 bagger. I expect stock splits in the future, distant future. And you got to think about like what's going to make this fail. What is going to make people stop going to Reddit? What is going to make the money stop? They don't even need that many employees. Because all the content's being generated for us for free. 91% gross margins. So anyway, this is part of my overarching investment thesis, which is to become a digital landlord through the privatization of the internet commons. So we're going to have a portfolio consisting of household names that are almost monopolistic tech platforms that are privatizing huge sections of the internet. The historian in me kind of feels like, in a few hundred years from now, we're going to look back on now as still the early days of the internet. If the internet's going to be around for thousands of years, like this is still ground zero. Like it's so easy to think like, it's so easy to look at like a graph of Amazon and think like, the growth is already made. I'm too late. I don't know. I mean, they probably thought that. They thought that here. They thought that here. They thought that here. They thought that here. Here. And here, I mean, it's like this was a 2022 correction. I wasn't paying close attention. I wasn't invested in it back then to actually know the exact reasons, but you could see that companies don't become overvalued per se. I mean, sometimes they do. It's just, it takes time to make the money. Like, Amazon needed time. It's like, it wasn't overvalued here. It just needs time to make more money. It's not overvalued here. It just needed time to make money. Now, this is where your opportunities come in, right? Like, this is another big part of my investment strategy is to find quality companies, growing sales, but you also want there to be fear in the market. Like, that psychologically creates a cheaper price. I mean, that's even the case with Amazon right now. I mean, you look at a 1-year graph and like the greed indicator is like turning to fear almost, which creates cheaper prices. It the shakes out the weak hands. Like the people who are short-term traders, the short-term thinkers, or people who need to retire now, need the money now, aka desperation, even though that word doesn't fully suffice in all cases. They don't have leverage because they need the money now for whatever reason. They need the money now because they need, like, if you don't truly understand what you own, you panic sell because it makes you feel better about like you're stopping the bleeding and you're trying to emotionally stop the pain. Like when you see your portfolio go down or you see a stock go down, it creates this like inner pain, like a psychological, emotional pain. And it's in our nature to end the pain. And so that's why people sell. But you're giving your ownership of an amazing company over to someone else who had the courage to go against the wind, to go, against the grain. And historically, you realize that a lot of the money is made buying quality things, going against the grain, believing in something when others don't. And I do believe in Reddit until I've been given other reasons not to. You can even listen to the CEO Stephen Huffman speak. There's some speeches on YouTube. He's obviously a bright, driven guy, and having him at the helm reassures me. I basically see like the CEOs of my companies in my portfolio as like the marshals of my army. You know, you have like a portfolio of say 20 companies. You got these 20 CEOs, and they're like marshals, and all the employees of the company are like the armies that the marshals are leading, and they're gonna go and get that money from the masses. That's the name of the game. So that's Reddit. Let me know what you think, and if you made it this far, like and subscribe, please, because I need the rest of the world. Otherwise, the rest of the world will never find me, and that would suck.